This is big. Bitcoin has actually seen a rejection of the previous area that we were finding support at for quite some time, and it does potentially indicate that we could be looking at a bit of a drop further down, maybe even some sideways action until some really fucking bullish stuff might end up happening. So I want to break all of this down for you in this YouTube video. If you are excited, do me a favor and smash up the likes on this video as well. I do want to shout out bingx2 guys in the description as well, because they're also running a no KYC plus over $100,000 bonus offer for you guys if you follow the link in the description down below. You can trade all of the markets we're familiar with in crypto, but also a bunch of others which I don't think I can show you right now for some reason, like stocks, indices, forex, and so on. So very, very cool offer right here. No KYC, over 100K in bonuses. Go check it out. But let's get straight into the rest of the video though, because what we have here is huge. See, Bitcoin has actually had this uptrend line for quite some time now, since basically the very beginning of this year, where we've, somehow, no matter how high we've gone, we have found our way back down to this line to capture some support and then blasted straight off. And we did that again back here. And then most recently, this pump actually led us to, setting the new high, but only just. It was actually more of a deviation. And now potentially getting ready to do the same thing again right now. And this is what makes it really interesting, is that not only do we have the uptrend that has, and by the way, this has been valid going back 7 months. So if we confirm it again, 8 months, if we confirm it again, that would be the 8th month that we've actually had interactions with this line. So far, it's been a 6-month line, that it's been useful for. Is that going to turn into 8 months? It very well might. These long-term lines are not something that you want to ignore, especially as a lot of people, if you start seeing the sentiment really shifting in one direction or the other, as you approach such a critical area, such an area that has already been so significant for the market historically, when you start to see that kind of element, dynamic, presenting itself in the market, especially when people become really bearish at these major areas of support, that's where it's worth just stepping back and asking yourself, do you want to be on that side or on this side? And, obviously I'm not trying to push you in any particular direction, but for me in particular, I like that there is this big Ichimoku cloud here. The daily chart also just happens to be one of these weird indicators where, again, it almost doesn't matter how high Bitcoin goes or how far Bitcoin goes, Bitcoin always tends to find its way back down to this daily Ichimoku cloud, and it is very close right now. I mean, if we just dump straight down in a straight line, it's at $28,000. If we trade sideways in a straight line, it's at $29,000. And it would take us about 2 weeks to get to the trend line, but a little bit less to get to the Ichimoku cloud. And I think all of this just goes to show that we've really started to put ourselves in a position now where it almost doesn't matter if Bitcoin dumps or if Bitcoin trades sideways over this next little bit. There's going to be a lot of good that can come in this market, and that is definitely going to be quite exciting to me. That's definitely going to be a sign of some new opportunities presenting themselves here. So here's a closer look at that rejection. What's actually really interesting is if we do look at this chart on the 4-hour time frame, we have seen 2 rejections since we fell below this area. And the reason that that's potentially going to be significant in this market is because if we're getting multiple rejections off, an area that previously, look at this right here, look at this right here, an area that previously was quite clearly providing support. If the market is showing us like, all right, we're not playing around here, this is a dangerous area, we're going to get dropped back down. That can be the sign for the bears to say, all right, well, let's dump it. Let's send it. Let's absolutely just drop this. Because we've been rejected, and so there's no point continuing to try the upside. And again, it's the Ichimoku cloud. It just keeps showing up. It's almost like the like the villain or the superhero that's just conveniently placed at the right place in the right time all the time somehow. Again, giving us quite a rejection here. We are now down a little bit lower than when this chart picture was actually taken. So, definitely triggering a fair dump here. If we measure this from high to low, a 3% move within just a matter of, less than a day, really. So, it isn't something to ignore, in my opinion. And it's also not something that was super unexpected. At the end of the day, not much has happened in the market. It almost kind of just looks like this slow bleed, to be honest, to me, which previously was so bullish for the market. I don't really know why it would be a disaster now. And also when we consider that, this is a major area of support. We've actually talked about this on the YouTube channel quite a bit. If we go ahead and draw a fixed range volume profile basically from the time we entered this area to now, this actually does not show up in the place I was expecting. I was expecting to see a nice big VPVR kind of spike right here. Maybe if I redraw this a little bit, but it might just not be the case, to be fair. Let's just see if we start it from here. No, yeah, we don't actually have that. So we don't have the VPVR on the side of support here. We don't have any particular volume profile showing us that we should find support in this green box right here. But what we do have, and you can just see this with your eyes, it's super obvious, is a lot of consolidation, a lot of rejections, a lot of support, a lot more rejections, you know, and now obviously we've already kind of started to come down here. So, you know, even though we're not getting this confirmation from the fixed range volume profile, you know, we are still definitely seeing that this is an important area on the chart. You know, and if Bitcoin is about to kind of drop into that, then to me, you know, my question is really, the first question I have is, well, why do you think that this can't be another higher low? You know, I don't think at this stage that we've seen a reason to deny that this could be a higher low. It certainly could be, and you know, I mean, it certainly might not be. You know, we have topped out at $30,000, which is a major area of resistance on this chart. And obviously, you know, major areas of resistance can trigger major reversals. But here's what happened the last time we hit the 30K area of resistance, you know, and that didn't necessarily trigger a reversal. We just went and set a brand new high for this cycle. So, you know, is that really the case? I don't know. Last time it wasn't the case. You can't really argue that point. It's very clear. Bitcoin got up to a price of $31,000. And then dropped a little bit down to major support, and then just set a new high. It was only slightly higher, yes, but it did set a new high. Really, I think the only majorly bearish thing on this chart right now is a double top. You know, and that is definitely not nice. It's not nice to see a double top right here. Is it a perfect double top? No. I mean, you know, it doesn't need to be though. It's not perfect. This is, you know, over here when we set this high, we were a little bit higher, a couple percentage points, really depending on how you draw it. Nothing crazy, nothing that is particularly substantial. So it definitely could be a double top. And we've seen this kind of action from Bitcoin in the past. You know, if we go back to 2018 and take a look at another very famous double top in Bitcoin's history, this one was quite problematic. This was when Bitcoin crashed down to 6K from 20, you know, and it actually maybe even sings some, you know, rhymes with what's going on right now, because we had the major crash. In this case, it would be 69K down to 15. And then we rally up to a high of, this is 11K, 11.8. But in our case, that level would be 30K. Rejection, come back down, rejection. And then, you know, we just never really see that price level again. So, you know, it really depends on your perspective. If you're more of a bear, that's what you're going to be seeing. If you're more of a bull, you know, for me, I'm just kind of looking at this midterm trend. I am very well aware that this trend could be over because we've hit resistance and we just can't really seem to break above it right now. And by the way, there are some more things I'm going to be showing you later on in the video which really makes sense with the bearish side of this argument. So, you know, just stick around for that. You know, my goal here is to be as objective as possible. I want to analyze both sides as analyze both sides as objectively as I can, you know, because that is what's going to, you know, produce the best analysis and the best results for me, at least in my experience. So, you know, that's something that I'm going to be keeping an eye on right here. What I will say, if we continue looking at the images of charts that I've got here, is that every time over these last kind of like 5, 6, 7, 8 years even, maybe even more than that now. Oh, no, 8 years is fine. Yeah, Bitcoin has pumped above this weekly EMA ribbon right here. You know, and it's been, you know, we've had quite substantial EMA ribbons. Now, this might not make sense, but this measurement here, this 25% measurement, is literally just showing you how thick the EMA ribbon is. How much space on the chart did it occupy when we broke out? And in this case, it was a 25% EMA ribbon. And what's really interesting is that every time we broke out of these EMA ribbons, even though we continued trending higher, you know, we did actually backtest them. Again, it's really hard to see. I've got to zoom in really tight, but, you know, you can see it a little bit more clearly over here. You know, we pumped up above the EMA ribbon here. It's about a 28% EMA ribbon here. And then we always came back down to test it. And in fact, we had a few really weird instances below the EMA ribbon, but the end result was that we moved up. And again, that's what makes this really interesting right now, is that, you know, we have actually, you know, we've formed these bounces before off our EMA ribbon, and if we take a very close look at what's going on here, we actually aren't even close to the EMA ribbon right now. You know, it is still about a $1,000, maybe even more drop away. So, you know, this is not, you know, particularly close to the current price action of this market yet. So, you know, if you're looking at history rhyming or repeating in any way, you know, if it's anything that you would take seriously, then, you know, this is something to keep in mind. You know, we're not even really at the support, you know, which we know is typically quite useful for Bitcoin, especially historically, and also we know it's a really big deal when we break the EMA ribbon. The other thing I want to say is that this was a 40% range when we started to break out of the EMA ribbon. So this was a very, very heavy kind of band of resistance, much heavier than some of the other resistance we faced in the past. Yet, you know, Bitcoin has done something pretty good with it already. So again, you know, I'm just kind of putting facts on your table. You can digest them however you like or not at all. You know, that this is not, you know, a place for you to come to be convinced of a particular idea, but instead this YouTube channel is here to present information to you, and I try as much of a non-biased way as possible, just kind of things I'm noticing, things that credit my arguments, things that discredit my arguments, and then based off that, I'm also telling you my own conclusions. And again, you know, despite all of this stuff, for me, I just don't think it's time to rule out the possibility of a potential lower high over here before potentially blowing up. You know, I think if this kind of situation in the market would spook you and make you feel like the market might drop, then you probably would be the same person that's bearish on gold. And if we take a look at gold, I think that would, you know, you'd start to see why that's quite foolish. You know, I mean, I don't know, maybe gold's just going to keep on dropping, but you tell me, right? Gold is meant to kind of track inflation, and if gold hasn't really seen its breakout yet, despite the dollar just printing into oblivion, you know, does that mean it's never going to adjust for inflation? Probably not. You know, a lot of the time when markets are irrational, they stay irrational for a really long time, but eventually, just in my experience, eventually they come back. It's the same way like with Bitcoin. In every bear market, we can call that irrational price action. If the true price action of Bitcoin is dominating the planet and becoming the world reserve currency with the IMF and everything like that, you know, then maybe the default price action for Bitcoin is up, and every time it's irrational, you know, it's trending down. And we know that these downtrends in Bitcoin's history have always come to an end. We know that overall, year over year, every 2 years, every 3 years, every 5 years, Bitcoin is in a higher and higher and higher price tag, in a higher and higher and higher price area. And at the same time, everyone's saying it's going to collapse and die, but that doesn't just, you know, that just doesn't quite happen. So, you know, for me, it's about like, okay, well, if gold hasn't broken out, you know, compared to all the inflation that's happened yet, does that mean it never will? I don't think so. I think that what we're seeing on the gold chart is we came up here for a double top, and then we got rejected again, and it was just not that big of a rejection, and we got a slightly bigger rejection, sure, but we're still just back up at the same place now. You know, where gold previously was sent from $1,900 all the way back down to $1,000 in 2016, you know, we now have a very, very clear chart pattern here where, you know, gold is trying to break that ceiling, and, you know, the longer time, the longer amount of time you spend kind of punching that ceiling, and if you don't actually succeed in that, it just keeps going on for longer and longer and longer. In my experience, that is what results in absolutely massive breakouts. You can actually go back and test this. Just look at charts on your own, and you'll see that when we've had just little bits of resistance, a lot of the time, you know, when we broke above it, it might not have turned into something big. Maybe it did because the trend was really strong, but when you had a really big area of resistance, you know, I can actually give you quite an obvious example of this right now. You know, when you had a really big area of resistance, an area that you just can't really ignore, you know, I think 20K would be quite a fair area to start this explanation with. If we take a look at this particular price area with this yellow line, 20K is a level that we knew would be difficult for Bitcoin to break, and it was. You know, when we got there, I mean, first of all, it took us how many years to get there? You know, like, it took us an incredibly long period of time to get there. But then even when we did finally get there, we stayed knocking on the door of this 20K level in a major bull market, one of the biggest, most explosive, craziest, like, most far-reaching bull markets, the most far-reaching bull market Bitcoin has ever had. And we still couldn't break out for 30 days, even with all of that bullish momentum. You know, so, you know, and then when we did, it just got crazy, and it was already crazy before, but it just got even crazier, and that is I think quite clear to see. You know, from 20k we double, we go straight up to 42. You know, from there we pull back a little bit, and then we're straight up again, doubling again. It's just absolutely fucking insane, guys, and this is the kind of thing that has happened to price action, you know, to charts in the past when we're holding the same level for a really long period of time. If you do eventually kind of you know, get that breakout, it does tend to be very significant. Look at how that was a horrible circle, but look at how significant this 6k area was on the chart for how long it was significant on the chart as well. I mean, this was you know, well over a year, just a little bit over a year on this chart, and then when we lost it, it was a major collapse, you know. So for me, we're looking at something similar. That's why I think gold is in a similar position, you know, and that's why I think and by the way, you know, this, all of this is a technical argument. That's before we even just discussed that it's fucking gold, you know. Like, of course, I mean, I don't want to be the foolish guy that's like, well, of course it's going to go up, but guys, it's gold, you know what I mean? Like, it would be really weird if it didn't, and obviously it is really weird that it hasn't so far, but you know, I'm just not the guy that's gonna you know, just kick the bucket and be like, all right, well, it's done, you know. Like, a lot of the times when these kind of things are happening and the markets are just being really weird, that is not a permanent state, at least in my experience, and that's why I'm here telling you guys the very same thing here. But you know, what we do have here, you know, it is definitely, you know, something that looks similar to gold to me, where, you know, we've kind of hit the ceiling, we're hanging out, we're chilling, you know, the bears just can't take us lower. I mean, this is meant to be the most formidable area of resistance ever, right? You know, you look at how Bitcoin has interacted with this level in the past. When we got our bounces off this level, you know, it was fucking quick, and like, what's to say that our rejections should be different? Look at the bounces we got off this level. I mean, this was kind of 28k, but absolutely huge. Literally, we're on the daily chart. It took us like a day every time, max 1 day, maybe even 2, just maximum 1 or 2 days. Look at this, these wicks, we couldn't even close a candle down at these levels when we came down here in summer of 2021, and then within a day, every time we got back down to these absolute lows, we didn't trade sideways and then pump up. No, it was quick. The market knew that this was an area of support. Why should it be different as resistance? That is my question, guys. Why should it be different as a resistance level? You know, I mean, we came up to this level here. Yes, we spent about 30 days trying to find resistance here, just consolidating before the drop. But we've spent way longer than that now in this relative range. We've spent 130 days, 3-4 months now, just up here, just you know, breathing in this air, just up at 30k. You know, if we were going to get rejected, would it have happened by now? Potentially. I mean, you know, it is something to consider. You know, it is, you know, if we really were this bearish, then maybe we would have dropped already. You know, I just think that is an important thing to be considering here in this market. Here's something else I want to show you. This is a PMO indicator. I'm pretty sure we've spoken about this on the channel previously. It's just something interesting to look at. You know, I'm not the guy that's going to pull up random indicators and be like, look, this is bullish as well. But here is something that is quite interesting, because when we got bullish crossovers on the PMO indicator before, you know, this has resulted in some really nice things. We actually had like nearly a bullish crossover right here as well, but you know, we got a few, only 2 in Bitcoin's history. We're about to have another one right now. We're kind of like in it right now. You know, and the previous times where this happened, this was a 1900%, 2000% pump, absolutely insane. The next time it happened, 500% pump. And these are the levels that, you know, these are the amounts that Bitcoin had to pump to get back up to its highs, you know, or up to its all-time highs. And so, you know, I mean, it's big pumps that we've seen off these levels here. You know, this was basically the beginning of the bull market, I believe, in like, yeah, this was 2017. It wasn't quite the beginning, but it was early 2017, right up to the peak at 20k. You know, this was kind of the kickoff to the bull market, up to the first peak at 64. You know, super obvious here. You know, when the PMO indicator over these last years, like, you know, very long time, again, we're going back quite far, but when the PMO indicator has crossed bullish, it's resulted in really big pumps for Bitcoin up to its all-time highs. And, you know, for Bitcoin to just match its all-time high up at, you know, 69, 70k, that is only a 2.5 times increase from here. It's a 144% pump. So 144% pump is a 2.5 times increase. You know, and that's not that crazy compared to 6 times increase here, 21 times increase here. You know, it really is, you know, one of these things which could definitely materialize. And I'm just not going full bull mode here. Obviously I'm not saying that we're getting all-time highs right now, but I mean, these signs and the nature of these signs, and I think this is what a lot of people miss, and it's why they don't buy low, and it's why they don't sell high, is that these signs show when it looks unrealistic. That's the fucking point. The point is that it's an unpopular, difficult decision to make, to be bullish at a time like this. And a large part of that is because, if you were bullish throughout, the price action back here, you would have been an idiot and you would have been losing a lot of money. So it's almost just a defense mechanism. But, you've also got to be able to, just really try and be as objective as possible about this kind of thing and just ask yourself, well, are we, is this one of those times where, I mean, so many things are starting. We've got the EMA crossovers. We've got, I'm sorry, not the crossover. We've also had crossovers actually, but the EMA breakout. We've had the, the back testing of the EMA breakout. It's already happened once. So who's to say it can't happen again? You know what I mean? Like, we've got all of these things that, I just wouldn't want to ignore so casually. Is it unfair to say that we could be doing, something like that right now? I don't think so. I just realized I wasn't showing you my chart, but I was just talking about these. You've already seen them anyway. Another thing I want to discuss with you, got a big one here, ladies and gents, is the dollar. Now, this is one of those things that I told you earlier on in the video where this might actually discredit my analysis, because what we've got here is the dollar on the left and Bitcoin on the right. And what we can see is each of these green lines are in exactly the same place on both charts. And what we can see is when the dollar started to drop, Bitcoin didn't really do anything. When the dollar started to recover, and usually when the dollar is dropping, Bitcoin should be pumping. That's what we expect. We expect that inverse correlation. One does this, the other does the opposite. Almost always, generally, especially when Bitcoin is healthy, that's how it goes. In this case here, something that should have been bullish for Bitcoin did nothing. But when the dollar started to rally, in this time gap here from the bottom to where it is right now, the dollar did move up by quite a bit here. And Bitcoin did absolutely nothing. Bitcoin just slid lower. So actually what we're looking at right now is, and we've been in this position before, where we're not responding to bullish stuff, but when bearish stuff happens, the price is dropping. Now, I can't think of a better, more obvious sign that this market is bearish than that. If we are responding with weakness to signs of strength, and if we're responding with weakness to signs of weakness, then we're just defaulting in that direction. We're just defaulting in the bearish direction. And that is what Bitcoin has demonstrated right now. Now, how much credit would I give that? Usually quite a bit, because that's quite an important bit of data here where we can see that, bullish things aren't taking the market up, but bearish things are taking the market down. Well, that's your most obvious sign that the market just isn't feeling great. But again, it's about nuance, right? How long is that going to be the case for? Are there major areas of support right around the corner here? These are really important things to be considering right now as we continue moving on in this market. Let's take a look at the long and short ratio, see where this is. Fear and greed sitting at 53. Long and short still massively long on Binance Retail. Bybit a little bit majority short right here. And Binance top traders just holding on to their positions, not doing anything. I haven't even touched my position for quite some time now, because of everything that's been happening in the space where just, not that much price action has been taking place. I haven't actually done much with my position because, we just haven't been moving that much. And, I don't want to be the guy that's over trading. But on the note of trading, guys, what is very, very important is that if you want to take advantage of exclusive offers, if you want to take advantage of very, very cool opportunities where you can trade traditional finance and so on without KYC, just with a Bitcoin deposit, being set up in advance pays off very, very well. If you want to trade something in the stock market and you don't have an account to do that, and the price action is happening and your time to enter has already come, and you still haven't even got an account set up, you're sitting on the wrong path here. You're not the prepared trader. Check out BingX with the link in the description if you are interested. It's a super flexible exchange with the offer available to you here. And Bybit obviously remains my all-time favorite exchange in the crypto space for basically anything crypto trading related. It's always Bybit for me. They're the most secure, best platform I've seen in the space so far. I've been using them as a customer for even before I started to work with them here with this promo stuff, and that is because I chose to put my money in a place that I highly trust. So, Bybit is absolutely phenomenal. Definitely check them out. You're going to get up to $30,000 to trade with when you sign up and deposit using my link in the description down below. And BingX has given you over 100K, which is just fucking insane. And you don't even have to do KYC to use the platform as well. So very, very cool stuff indeed here, well worth checking out. But with that, guys, if you have enjoyed this video, you know exactly what to do. Hit up the likes, subscribe, tick the bell, do all that good stuff, and I'll see you all in the next one. Cheers.